Hello again. Looks like we can get started soon. I see registrations signing up, and I'm recognizing some names, so good to see everyone attending. So thanks again. Welcome to our webinar today, Investing in Emerging Technology. The idea today is I'll have a discussion with our guest speaker for about 30 minutes or so. We'll leave some time for questions. On the right-hand side of your screen, you see a taskbar. In that taskbar, there's some handouts that you can access throughout this presentation. It's the product sheet for 4 of our ETF solutions, investing in emerging technology. We also just completed a blog on investing in emerging technology with ETFs post-COVID-19. You can find that on our website, and we'll look to possibly send that with the replay when we send that out to everyone who's registered. In that same taskbar, there's a question tab. You can enter questions throughout the webinar, and I'll do my best to get to those questions either during or after the webinar. And if we don't get to everyone, we'll try to answer some things after we'll follow up and answer those questions. So why are we here today? Why this focus? We wanted to review and discuss the surge in emerging and disruptive technologies and discuss the long-term investment themes and trends and why you might consider investing in these trends now. Today's agenda will we'll be covering sort of this age of disruption and a couple solutions you could consider to provide you access to these trends, specifically RBOT, which is Horizons Robotics and Automation ETF, and BBIG, which is the Horizons Global BBIG Technology ETF. And I just want to highlight a couple other ones at the end as well. HBGD, Horizons Big Data and Hardware ETF, which helps to provide access to the cryptocurrency complex and semiconductors, as well as 4, which is the Horizons Industry 4.0 Index ETF, providing exposures to a group of different technology themes. So with us today for this discussion is Hans Albrecht. He's Vice President and Portfolio Manager at Horizons ETFs and our options specialists. Hans has an MBA from Cornell University and is a graduate of the University of Oxford and MIT in the FinTech and Artificial Intelligence programs. So clearly he's qualified for this discussion. He's also a featured speaker and commentator in many different media outlets such as Bloomberg, Globe and Mail, Financial Post. So Hans, I want to just have a discussion. Maybe you could comment on the surge of these emerging technologies and why there's so much spending and growth in this area right now.
Okay, so thanks, Jeff. Yeah, thanks everyone for coming on today. Yeah, so I mean, tech is kind of a big topic these days. I think the genie is pretty much out of the bottle, you know, unless you've been sort of living on the dark side of the moon these days. We know how much it's really helped us throughout the pandemic in very, very significant ways. So, we'll get to the spending. You know, the way I see the future in the space is not really through the sort of typical lens of whether tech makes sense or whether it's working. We know it's working. I think the key really for investors, for advisors, is to be looking at it from the standpoint of what kinds of runways almost all of these larger themes and smaller sub-themes that we have in our funds have ahead of them. I think it's in understanding that these runways are very, very long that we realize it's very early innings. And so, you know, we often get pushback, oh, is it too late? Is it too late? In my opinion, it isn't even close to too late. And so, you know, as we come to this sort of crucial realization that high growth investing means looking down several years ahead, you start to realize that is really in play here. You know, we're going to have those periods of excessive hype. We're going to have fluctuating stock prices and those periods of exuberance that come and go. That seems to be par for the course for markets in general, but especially in higher growth areas. But what you really want to know is that those narratives have real staying power. So, you know, when I look down 3, 5, 10 years, maybe even decades down the road, these are really compelling topics that are likely to play a very large part in how our world evolves. And so to me, that's what really drives long-term investment in this current tech super cycle. It's really having that long game mentality. And so when we talk about emerging tech, or exponential technology, if you prefer, we look through that different lens, and it's about making those certain educated leaps. And so that's where that word exponential really plays into it here. It's having this ability to sort of read between the lines a little bit. In normal investing, we tend to extrapolate in somewhat of a linear fashion. In exponential technology, that line becomes this curve that sort of reaches increasingly upward. And the developments that lead to that curve, of often resetting or taking that new steeper trajectory in some of these sub-themes, can come from a number of angles that we sometimes see, but we sometimes don't see at all. And I think a lot of that comes from sometimes a lack of appreciating how cost and the pace of technological achievement sort of feed on each other and propel each other forward. As costs come down and usage rises, that sort of process makes a huge difference. And sometimes an external force like a pandemic can play a big part, as we've seen as well, in resetting those trajectories higher. So from a pace perspective, I like the example of downloading 15 years ago, let's say. Could anyone have really imagined that streaming movies would be this reliable reality one day? It used to take, I remember with Napster, it would take me a day to download an album. And, way back then, even 5 years later, it could take you 2, 3, 4 days to download a movie. Streaming wasn't even remotely imaginable in a sort of, for the masses fashion. And so what made this a huge reality is huge improvements in infrastructure and bandwidth, speed, connectivity, all that fun stuff. And these things are always moving in a similar direction and keeping pace with these sort of ambitions. And so what I've said over the years, Jeff, is that science fiction is happening right now. And I think without question, that is still the case. And so then we look at something like 5G that now takes that concept to new levels as speed and latency are improved, and these hundreds of billions of Internet of Things devices that are going to be drawing insight from all around us. All these analog processes become, digital things and start to feed that big digital machine. And so that phrase that I like to think of, what might be possible, is a very powerful one here. And so, I like to think of the example of Tesla. It's not trading at 1,100 times earnings because it's a car company with car growth ahead of it, right? Everyone's jumping on board. There's a great Audi I saw on TV the other day. There's a Porsche. Everyone's jumping on board. It's rather the technology platform that Tesla sits on, this massive pile of data. And these are the things that lend themselves to perhaps new ways of monetization in, for perhaps healthcare, military, who knows where. There was also, I think, I was reading a little bit about cameras and how they can see around corners. What if Tesla figures out how a car can see around a building to prevent, potential accidents? Does that lend itself to these other uses? So that is the stuff that gets me excited, and I think that's the stuff that should get everybody on the call excited, to really realize that these runways are truly, truly long, and that these spending growth patterns have been reset to a higher trajectory. And so, as those costs come down, you get this sort of cycle of cheaper, faster, better, higher adoption that sort of plays out on and over and over and over again. We have these computers that are thousands of times more powerful than they used to be. And so, as you mentioned, Jeff, we've got 4, and we've got all these different sub-themes within that product, the 5 sub-themes. And we could talk about that. Today, I really wanted to focus in on robotics a little bit. It's one of my favorite sub-themes.
And Hans, thanks for addressing that, the long-term investment themes, and is it too late? Because I know that does come up a lot, and I think that what has caused that is the work from home stocks. A lot of the work from home stocks that have really rallied through the COVID pandemic and people being home. So now I think people might be looking for those opportunities for one, or can those continue to do well, or what's going to continue to do well upon some reopening. And I don't know if there's an acronym for that yet. Is it WFO for work from the office, or is it leave the house, LTH, leave the house? So pretty soon we'll probably start hearing things like that. And I think robotics is probably one of those, as the companies and manufacturing realize how much they have to continue to automate to meet the digital demand. Is that correct?
Exactly, and the thing is, that's what gets me excited about that space. Is sort of I look along the landscape here, and I think, well, okay, look, the horse is out of the barn on some of these things, and while I think the horse will run for up to decades in some of these areas, and I think a lot of them make great investments, I sort of wanted to dig into something that really might still be sitting just a little bit under the radar, so to speak. And so you talk about work from home and play from home and all this sort of, the jump on cloud and software as a service. You can think of those things as sort of the low-hanging fruit, right? Those were easy. I mean, anyone can adopt that technology. Anyone with a computer can jump on and use Google Drive and can use Zoom and Teams and things like that. Even a little bit more sophisticated stuff like basic digital transformation, right? A lot of businesses last year had to very quickly jump on board the digital transformation train, and they use things like Shopify and Amazon to do that. Relatively easy. Robotics is an area where there's a little bit more of a conscious decision to add robots or automation to a process. But what I think has happened is that the mentality has really drastically changed in the last few years, in the last 6 or 8 months, which has really led us to believe that the spending growth there is also on a new trajectory. And so, part of it, I'll explain a little bit about it. So part of it is, there's been this idea that cheap labor is very plentiful around the world, and particularly in China, and that's just not the case anymore. And we can talk about the pandemic, but we'll set it up first this way. In China, the fact is, I've seen this mentioned quite a bit in the last few months, is people don't really want to work the production lines anymore. And this sort of thing has been gaining momentum. I remember seeing quotes like this back in 2008, 2009. Urban wages there have really shot up. In Japan, this is actually a pretty serious issue. And one of the reasons Japan is a very serious adopter of robotics and automation is because of their aging population. This is going to be an actual problem over the next 20 to 30 years for Japan if they don't actually start to roboticize their economy to a large extent. Now you add in COVID, where labor became this great uncertainty, and are my workers going to show up? Are they going to be able to work near each other? Demographic trends, right? Populations are aging everywhere, even in China, even in some of these younger countries, right? Less so as a place like India, but very much so in other places, particularly developed nations. And so as birth rates drop, in fact, it was just this morning that we saw again from the census, US population growth is the lowest it's been since the 1930s. Now, part of that is immigration under Trump, but the main reason has been low birth rates. And so you start to develop this really great recipe for robotics and automation going forward. It's not just about replacing people either, it's about productivity. So there's a company that I follow called Midea. They're a Chinese home appliance maker, and they have two factories where they fully implemented automation technology. They saw efficiency increases by almost 30% in these factories. And Walmart also, this was talked about a month and a half ago, they're starting to focus more on building warehouses, smaller warehouses, but more frequent ones throughout the nation, throughout North America. And what they found was that the costs of picking and fulfillment can be reduced by quite a bit, from between 60 to 75%. So what you're saying about people getting back to work, there's no question people are going to do that. But what I like to think about is how a lot of companies are not going to want to unlearn a lot of the lessons that they've learned. This isn't just about replacing people. This is about some of the lessons of efficiency and productivity that companies are going to learn as robotics come down in cost, as their effectiveness rise drastically. We start to see something like we do on this slide here, right? So, and there was a survey done recently. We've talked a little bit about warehousing, even on the retail side. So you think, well, robots on the retail side, what are we talking about? Well, it's picking and it's cleaning and it's stocking shelves and things like that. There was a survey done by Retail Wire where they said they were very surprised by the uptake in robotics and automation. And they said, and I'm going to quote this, they said, "These are not the kinds of numbers indicative of an emerging technology in an early phase of deployment in retail, but of a technology just a few short years from widespread adoption." That quotation mark kind of blew me away. And I think it's happening there, right? And so within the survey, they had a number of people fill this out. Nearly half of the retailers said they're going to have some sort of robotics project up and running over the next 18 months. And so, loading trucks. Yeah.
As you mentioned, I think as that cost goes down and they see the efficiencies they need to keep up to competitors, the adoption of this is going to continue. And we see that on this slide, the industry opportunities for robotics are many.
Yes, we've got, I mean, and that's the thing some people don't realize. It's about drones. It's about, it's about robots that are kind of behind the scenes disinfecting hospital rooms, doing kind of, sort of very laborious things. And I mean, that's really part of the beauty of robotics is being able to replace, kind of mundane, actions so that people can do more important things. So, we're talking about surgical robots. We're talking about, robots that you can wear like an exoskeleton, like an alien's, quite literally. You can Cyberdyne makes, or one of our holdings, Cyberdyne makes this robot that you can wear, and it helps you to pick up heavy items and move them around. It's pretty awesome stuff. And of course, iRobot, which we've done, that the Roomba robot has done very well. They've got one that cuts your lawn. They've got one that I think cleans out your gutters and things like that. So, and then another big one, which again speaks to very, very early stage growth, is drones. We have a number of companies in our fund, in our bot, that manufacture or have to do with drones for commercial, retail, logistics, healthcare, and military uses. And so I'll mention a couple of those. AeroVironment is the Pentagon's top drone supplier. So these guys specialize in unmanned aircraft, basically drones, high altitude sort of satellite type creations. It recently acquired. There's a lot of consolidation going on in that industry as well, and they've recently acquired Telerob, which sort of helps with their drone business. ABB, another name that some people know, it's a Swedish maker, top robotic name in the world. They sell something called HoverGuard. So this thing hovers around neighborhoods, around commercial, domestic, residential neighborhoods, and it can detect methane leaks with a sensitivity that's about 1,000 times better and 10 times faster than the sort of conventional leak detection tools. And this is edge technology, right? So it lets you know immediately what's going on, sends the report back to headquarters, which is awesome stuff. And then even a name like NVIDIA, which seems to have its finger in just about everything, is very much involved in drones as well. They've got software that that is being used for commercial drones inspections, like inspecting power lines, things like that. They have one called Jetson Technology, which is a cool name, the Jetsons. They use them sort of in warehouse and analytic environments. And then we're looking at delivery standpoint. You've heard that Amazon's going to start using drone deliveries at some point. And the reason that's very important, again, we're talking about things that are saving companies money in the end. And so they say that that last mile of delivery accounts for about 80% of your costs. So if something costs $6 to send FedEx, $2 USPS, that we envision a time where the drone cost could be around 10 cents to deliver something, which is absolutely amazing. So again, we're talking about things, and I often tell this to people. I say, look, you can invest in this space, and it's fantastic, but you're also investing in the broader economy. And so there was one study that came out, and they said deep learning, just deep learning itself, which is a form of artificial intelligence, could add $30 trillion to equity market capitalizations over the next 15 to 20 years, right? And that's not a small number. That's more than the internet created, essentially, up to now. And so, we're talking about technology that we can invest in, and we can turbocharge our portfolios with these incredibly fast growing themes. But this is going to touch everything around us, and it's going to help the world in general in many ways, in healthcare ways, and et cetera, but it's going to help our portfolios in general.
Yeah, great way to add some of this to your existing standard portfolios for sure.
And then how about AI? How about AI, Jeff? Did we have a slide on that?
Yeah, we do, right here.
Yeah, right here. Okay, so that final piece, and sometimes people don't realize, our bot is about robotics, automation, as well as artificial intelligence, right? It's about making these things faster. It's about creating robots that can do amazing things. Robots aren't that new. They've been used for 30 years in industrial applications, but the difference is now they're generating insight. They're learning from themselves. Certain robots are able to order maintenance on their own. They're able to, recalibrate so that we reduce waste in whatever product they're making. And so we also own in our bot a number of pure artificial intelligence companies. And by the way, Jeff, a lot of these are domiciled in Japan. So because Japan is such a powerful force on the robotic side, a lot of these companies happen to be over there. So companies like Neural Pocket and AI Inside and Paksha Technology, companies that there's one, Neural Pocket, I believe, is the one that sort of predicts fashion trends. So they scour sites like Instagram and social media, and they figure out, okay, where's fashion heading? Where are you best to invest your money from a fashion standpoint if you're a fashion company? Things like that, just amazing stuff. So it's about some individual companies like that, but a lot of it is about the ways that artificial intelligence are working together with automation. And I find that really fascinating.
Excellent.
And then the next wave, yeah. I mean, look, we talked about aging populations. The thing that I would say there, I won't say much on it, is that, look, I love an investment thesis where, I can't argue with aging populations. I can't argue with low birth rates. Even in places like Finland, where you've got incredible social safety nets, you have falling birth rates. This is happening, right? This is a trend with staying power. It isn't, it sometimes, robotics get a bad rap. We're replacing jobs. Yes, there will be some pain, and we can't stick our head in the sand. There will be some of that in there. But over the long run, there just aren't enough people to accomplish what we need to get done. And robotics will go a long way to filling some of these gaps over time. And that's what excites me as well. And a lot of it is cobotting. One of the big things now is cobotting, people working alongside robots to improve productivity and whatever it is.
Yeah.
So,
and I think that's coming up a lot in the surgical and medical industry, correct? And I think we highlight a holding shortly on that. So if you want to just to review if you summarize with those key demand drivers for that: robotics, automation, artificial intelligence.
Yeah. So we can see, I mean, 5G is kind of going to be, the tonic that really just kind of gets things going again. The jump from 4 to 5G is much bigger than the jump from 3G to 4G. And so, I've done presentations on 5G as well, where, I get people excited about what is possible. And, that's another one of those things. There's no stopping it. And the repercussions of 5G are very far reaching when it comes to almost all the themes that we're talking about, whether it's big data and software and cybersecurity. I love cybersecurity, that sort of never-ending revenue stream that you have there. So you have these terrific demand drivers. You have things. You have government support, which is a really key thing there. Anytime you have that, you're going to have a great deal of focus on there. We'll talk about blockchain in a bit and how the government, the Chinese government has made the case for blockchain being a really important technology, and suddenly that becomes a great place to invest. So you add all these things together. You've got declining tariffs we have on the slide, so you guys can go through this stuff, but this is really amazing. Yeah.
It seems like the 5G is really enabling that merger of the physical and digital world, and the combining of those two, and taking advantage of it within robotics and automation and the artificial intelligence that drives it.
Absolutely. And you think of how that plays into Internet of Things. I mean, we're talking about 1 trillion devices potentially around us. Suddenly 5G makes that. I mean, we've all experienced frustrations with bandwidth and connections. That should be a thing of the past with 5G. And this just serves to turbocharge everything that we're talking about.
Correct. So, and some of the details of RBOT and RBOT.U, which, as we've discussed, is the Horizons Robotics and Automation Index ETF. It does provide exposure to companies involved in robotics, automation, and artificial intelligence. There is the Canadian dollar ETF RBOT, and there's the US dollar version RBOT.U. Low management fee of 45 basis points for your diversified exposure in this space. And rebalanced it's rebalanced year. Some might be familiar of a US ETF called BOTS. This is the same index. This is the same ETF, provides you the same exposure as that ETF index, but it's in Canadian dollars, and your US dollar exposure is hedged, and it has a lower management fee than the US dollar than the US ETF.
And one of the bonuses, Jeff, that we didn't talk about is you get this diversification out of North America, and that's really key. About 50% of our names in RBOT are elsewhere, Japan and some Europe and some Korea. So
yeah, and I checked that out, and that is in some of the key features that I wanted to highlight is that growth opportunity. I think Hans did a great job talking about the continued growth of this area, It's not a short-term blip due to COVID. This is going to be a long-term growth investment trend. This gives you a great way to access that. It's a diversified approach within itself, but the beauty of it is it provides little overlap with holdings you might already have in your major broad indices, such as the S&P 500 or NASDAQ or FANG stocks. It is about 50% international exposure. Actually, the largest geographic representation at the end of March was Japan. You mentioned that, Hans, followed by the U.S. and then Switzerland. A lot of the robotics and AI companies are over in Japan and Switzerland. And I mentioned currency hedged on the Canadian dollar version. So your U.S. dollar exposure is currency hedged, so you don't have to worry about fluctuations within the currency. So a couple.
We've talked about a few of these, AJ.
Yeah.
Do you want to move on to BBIG? That's kind of exciting to talk about too.
Okay. The one I would mention, here's some examples of companies that are in RBOT, and I mentioned the medical devices, Intuitive Surgical, an interesting one, just because we mentioned it. It's a robotic device which allows surgeons to perform surgery basically on a computer using this robotics device, and the theme behind that is they have so much wisdom the older they get, but they might not have the necessary tactile
nerves
to deliver the surgery. So this helps that. So co-roboting human wisdom with the precise nature of a robotic device, and Intuitive Surgical is a great example of that. And you did mention NVIDIA, which is in everything via semiconductors. And so then BBIG is the next solution I thought we would highlight today. This is one of the newest ETFs in our tech lineup, just launched recently. So what is BBIG? It's actually quite simple. It provides exposure to the growth of companies in these 4 areas: battery, biotechnology, internet, and gaming. So BBIG, I always say it's big with 2 B's. And it's ended up also quite simple within the exposures. The top 10 companies in each of those categories for 40 holdings in an ETF. So Hans, could you give us your thoughts on this opportunity itself, why these themes make sense now, and most importantly, how they all work together?
Yeah, so I think this product is great. It fills some of the gaps that may have existed. I mean, not gaps, because the other ones are quite comprehensive. But look, people are interested in biotech these days, and battery technology and gaming. We'll talk a little bit about those. But there's sort of the interconnectedness is something that I've talked about for a while. There's sort of overlap in so many things in technology. It's very easy to pivot. When you're talking big data, it has to do with GPUs and semiconductors and data sensors, processing power, then that overlaps with augmented reality and all these wonderful things, IoT. What we find is that, there is, if you take a company like Google, it sort of derives most of its revenue from ads. But, it's also a very big force in augmented reality and autonomous vehicles and AI. Clearly, it sits on one of the biggest piles of data around. So, how can this data be used in the future? So we find that there's sort of, when it comes to emerging and exponential technology, there is quite a bit of overlap, and it all sort of plays into a similar ecosystem. I find that, it's interesting to look at some of these categories here. So when we talk about battery, the secondary battery market, this is really big these days. You've got this big push from governments, and, I like that, big push from governments and companies to reach zero emissions. By say 15 to 30 years from now. And so what that means is you're looking at a massive potential demand for these battery metals, the metals that go into these devices. It's big, right? This green revolution it's about green infrastructure, and a lot of that doesn't exist at all. They're building this stuff from scratch. And it's not being pushed. The reason this is such a powerful sub-theme is it's not being pushed by one country. We're talking about China, North America, Europe. Everyone is getting on board with this, and so the amount of spending required in this area is going to be just, quite dramatic. And
gaming is the one that might surprise some people in this, but the growth of gaming is unbelievable. I saw a stat that in 2018, out of the 4 most watched sporting events, with air quotations, out of the 4 most watched sporting events, 3 of them weren't sporting events at all. They were actually gaming events. So it was the Super Bowl and then 3 gaming events, internationally viewed
Unbelievable, isn't
and
it? Yeah.
and that was 2018. I can only imagine that that's continued to grow, especially since the pandemic.
Well, in 2020, we saw a 70% increase in the U.S. alone in viewership in esports. So, around the world, I think we pushed about 500 million people viewing esports. That's and if you look at the U.S. alone, to the numbers alone, it's somewhere around 85 million. That overtook Major League Baseball, the NBA. It trails the NFL by a good amount.
Yeah, and I think that's
really,
where the most recent growth is the U.S. I think overseas was on that trend earlier.
So and then like you said, Jeff, I was going to say one of the big drivers is last year there was this giant search for content, right? So I remember somebody talking about it recently. They said, look, one of the big barriers to gaming becoming mainstream, right, to watching kids play video games or people play video games was the reluctance of broadcasters to put it on the air. But guess what happened last year? COVID completely blew that sentiment out of the water. They needed sports were done for a while. They needed content. And so now, as a result, and I always go back to this new trajectory for emerging tech. Well, here we go. Gaming culture is now this giant horse out of the barn phenomenon that's only going to flourish, in particular because of millennials and Gen Zs are really leading that push there.
And I heard someone say, well, why would someone watch someone play a game? And I said, and the answer is, well, we watch golfers play just because they're better at it than us.
That's true. Yeah,
so the key features of BBIG, again, the growth opportunity, getting exposure to potentially decades-long mega trends in technology growth and usage in those 4 areas we covered. Again, diversification. You gain diversified global exposure to these 4 emerging themes within technology. Right now, it's about 40% of your exposure is outside of the U.S. In countries such as Japan, South Korea, and Germany. And you're getting access to some of those companies that would be very difficult to purchase on your own directly in other markets. Just so again, some of the quick details. Also, BBIG, Canadian dollar ETF. In this case, the foreign exposure is not hedged. There's also a U.S. dollar unit ETF. So if you wanted to invest in this with U.S. dollars in your U.S. dollar account. Management fee also low at 45 basis points. And this one, the index, is interesting as it completes a rebalancing semi-annually, where other companies might be exchanged, a new name and deletion of a name, but it's actually rebalanced to its original weighting on a quarterly basis. So, and this gives you the example of some of the companies in each bucket. You see 3 or 4, you see 3 in each bucket there. Any comments, Hans, or stories on some of these companies that you might quickly review?
I mean, genomics is the big one. In biotech, you've got this really hot space this year, particularly in the area of cancer detection. So, we've got Illumina as one of our holdings, not listed here, but they just bought Grail, which is a top maker of these cancer detection tests. And so, what you can say there, again, it's another example of cost and usage. And so we've seen this sort of cancer screening go from, say, $30,000 a test, 5 or 6 years ago to $1,500 today. And it's soon to be $1,000. And then some estimates are for it to drop to $250. So, does that have the potential to change people's lives? Yes, of course, but it's also a potential $150 billion market for companies that are in there. Moderna, we know. CRISPR, another one, involved in genetic breakthroughs related to muscular dystrophy, things like that. So really, really hot area, and I think we can agree that it's sort of been turbocharged by what happened, in the recent year. And so, there's a big push to sort of, AI is really helping. I think AI helped Pfizer with the vaccine, and one other one, I can't remember which one it was. But look, there's, new technology and things like AI are starting to compress the timelines for drug discovery and things like that. And I think that's going to be again, early stage stuff that I think has a lot of runway to it. And then you've got, in battery technology, you've got Samsung. That's one of the premier names out there. They actually, believe it or not, they still make cathode ray tubes, like for old TVs and monitors. But importantly to us, they make some of the highest quality energy storage, lithium ion battery systems.
And that's the key, the energy storage, I believe, right?
Right. And so Albemarle does that as well. So lithium is big, right? If you've seen a chart of lithium, it's really started to make a comeback. This is the stuff as we green the world, this stuff becomes very, very important. So you're looking at very, very long runways. On the internet side, hey, you guys know these names, but I think you just think of this as the basic foundation for things. I often mention to people, Microsoft, software, operating systems, cloud. It's kind of like owning electricity, but it's actually a huge growth industry. And without these companies, they're quite literally building the foundation for everything around us.
Yeah, it's like utilities, but with some growth still.
Yeah, great story there.
Okay, excellent. So we did a little bit of a deep dive there on RBOT and BBIG. Just wanted to highlight the other two as well that we have within our technology thematic lineup. You'll see that they all have the same very low management fee of 45 basis points, providing you that low-cost exposure to these growth themes. The other one that we didn't highlight today, one of them is HBGD, which is Horizon's Big Data and Hardware ETF. This is topical right now as it provides exposure to the larger cryptocurrency ecosystem. Obviously, a lot of discussion right now on Bitcoin and Ether, and I think a lot of people are trying to decide which one they should go with. So this could be a solution that you could look to cover sort of that whole theme. It invests in three main categories. One is blockchain technologies, which includes the miners like Hive, Riot, Hut 8, and the exchanges like Galaxy, Marathon, and Voyager. It also invests in semiconductors, such as NVIDIA, which we read earlier, and Intel, and also the storage and data centers that can store and warehouse all this data, such as Western Digital and Digital Realty. So that covers a lot there with the blockchain and the crypto world and the semiconductors. So could be your solution if you're looking at that crypto space and making an investment in that space. And then I just want to quickly talk about FOR, Hans, and then I'll ask you about that. FOR is the other one. FOR, that actually stands for Industry 4.0. So the next industrial revolution is called Industry 4.0, hence the name FOR for that ETF. And this invests in a group of themes that include advanced robotics, which we've discussed, Internet of Things, the connectedness of it all, cloud and big data, cybersecurity, which you mentioned, which will continue, and augmented reality and 3D printing. But Hans, we're definitely getting some interest in the crypto complex, the crypto world, and our Horizons Big Data and Hardware Index ETF. Any quick comments on that opportunity?
Yeah, I mean, I think we have a unique way of investing in this sort of ecosystem that is cryptocurrency and blockchain. Really, I mean, I see cryptocurrency as sort of the foremost way that blockchain has really been monetized to this point. But the sky is the limit for blockchain. We're starting to see it used in the LVMH just came out the other day and said that they're considering using it to keep track of authenticity with their items, with their luxury items. It's been considered for artwork, the art world. So the sky, the runway looks great for blockchain in general, but this is a great way to have exposure to the cryptocurrency part of it all. These miners tend to have terrific margins. So it's almost like investing in gold miners to some extent versus gold itself. So with Bitcoin, you're going to have some exposure to the ups and downs and vagaries of that market. These companies are doing very, very well mining the product, and they don't have to go out and dig big holes, and they don't have issues with workers and that sort of thing. So a little bit of an advantage there, but really great way to have exposure to the cryptocurrency ecosystem, but at the same time have that backbone of all the things that are helping to build the foundation for industry.
Yeah, the infrastructure. Yeah, the infrastructure around it.
Right. Great way to get access to that.
Excellent. And I have on the slide right now is the performance of that ETF, which is quite astonishing. Over since inception, and of course over the year to date and the 1 year number, and the since inception number is impressive as well. And in June of this year, this ETF will have a three-year track record. So impressive returns due to that crypto complex and the rise of the cryptocurrencies and the semiconductor industry with the demand on semiconductors just continuing. I'll go back and highlight the performance of RBOT, which we discussed today. This has about a 3.5-year track record for us now. Also an impressive track record across the board with a 1 year, 3 year, and since inception number. I really believe this investment theme can continue and will only continue and grow. And then for also coming up on a 3-year track record later this year, done quite well over the 1 year and since inception number, giving exposure to those themes I mentioned, which is important, with the 5 different themes in there, because they're not all going to be working at the same time. So that's why it's important to sometimes, if you can't decide, or if you don't have strong conviction on one theme, grouped or multi-themed ETFs such as FOR or BBIG that I mentioned can give you the exposure to all the growing themes, and you don't have to sort of choose which one is your preference or which one you believe will be the next driver of growth. And we've seen them have some rotation shifts over the years. And we don't have performance on BBIG yet, as that was just launched recently. So this is the end of the formal presentation. Just a reminder to contact us. We are social with our 1866 number, our info@horizonsetfs.com email. Look for us on Facebook, Twitter, Instagram, as well as LinkedIn. Our website is a wealth of knowledge. Please go to our website. You can find information on the web page of all the different ETFs we mentioned today. There's a lot of information on the side panel within each web page and under documents, and it shows the performance and the holdings and the geographic breakdown as well. And of course, you can reach out to us if you want more info on that 1866 number or the email. Now, Hans, one of the questions I got while we were during the presentation is back on the spending growth slide of robotics. I don't know if we have an update on this, but someone asked if we did in fact hit that 151 billion of spending, if the robotics market will grow to 151 billion in 2020 on the fourth part of that slide.
Yeah, that's a great question. I'd have to look into that for them, Jeff, but I can imagine. It's tough to say. I think by the end of 2020, it was such an odd year that it may have made things better. Or from my understanding, early in the year, the sort of nuts and bolts of Industry 4.0, which you would consider sort of the more physical aspect, robotics, automation, really slowed down. But then it actually accelerated things because, of course, physical distancing became a priority, and so a lot of companies in Asia in particular started to realize, well, look, this is, the writing's on the wall. So again, it speaks to my compression of timelines idea, which is, if you thought of doing something over the next 2 or 3 years, well, suddenly you were compelled to think about automating or at least introducing some automation to your processes earlier last year. So I think you saw a lot of that happening. So, in the latter half of the year, I know we saw quite an explosion in revenue for some of those companies in the fourth quarter in particular. I don't know how it played out throughout the year and how it spoke to that particular slide there.
Okay, we can look into that and see if we can provide some more information. And one last question, and it is about HBGD and the crypto world. One of the viewers is wondering on the correlation with Bitcoin and or Ether. How much correlation is there? And then let's discuss on some of the additional diversification it provides with the other holdings.
Yeah,
Can you speak to
the
that?
correlation, yeah, we know it. I mean, it correlates very, very, very closely. Now, and I think, I think that makes sense. That's generally how these things work. When an underlying starts to move quite drastically, the miners, so to speak, the producers of that product tend to do very, very well. If you think just to even a year ago, these companies were, a fraction of where they're trading now. So they've all really benefited from this sort of beta to the price of Bitcoin and Ether. Now, do we see that, smooth out a little bit over time as people realize, well, these miners are going to do well, whether Bitcoin's at 25,000 or whether it's at 100,000, they're probably going to do okay as well. So do we start to see a little break in that correlation? Possibly, but right now the correlation is very, very strong.
And I think you could see that in that 1 year number, and especially the end of 6 month
exactly.
number where you've seen some big growth in the cryptocurrency asset level. You're seeing it reflected in this ETF. But again, I want to remind people that the other part of this ETF is the semiconductors and the storage and data that provide the infrastructure to it. So even if cryptocurrencies slow down, there's definitely a continued need for data housing and semiconductors, providing you some extra diversification benefits within this ETF.
Yeah, exactly, Jeff. So no matter what crypto does, and I've always said this even for a couple of years, I said cryptocurrencies could go to zero, and this fund is in all likelihood going to do okay because a lot of the critical foundational elements to our new world are represented in there. So even if crypto goes down, do digital realty and Equinix do poorly? No, probably not. They're growing like gangbusters all around the world because they're building those data centers, and there's only going to be a need for more and more storage. So like you say, Jeff, you've got that sort of defensive element to it. We do have some companies in there that maybe speak more to the infrastructure as it pertains to blockchain itself. And again, there you go. That's an area that is growing as well. Blockchain's growing as well. So I think there could be, you haven't seen the disconnect. A lot of things have been moving together lately in the past year, but you may see a little disconnect, and you may see that defensive benefit play out.
Great point. Blockchain is obviously needed for those cryptocurrencies, but there's also other uses.
Yes.
So, excellent. Thanks, Hans. I really want to thank you for your insight, your passion, and your expertise in this area. I hope we reviewed this opportunity on why you should continue to look at emerging or disruptive technologies as a portion of your portfolio for those true long-term growth trends, but with sort of short-term catalysts that you might want to look at right now. And I believe we reviewed that, but please let us know if you'd like some more information. So thank you everyone for your attendance and interest and your support of Horizons ETFs. We really do appreciate it. And we're going to end our webinar today and look forward to connecting with you soon. Thank you.
Thanks guys.
Tom.
Thanks, Jeff.